Does your law firm sometimes need to collect on behalf of your clients? Well, then you need to know how to record that in QuickBooks Online. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. Sometimes attorneys must collect funds from third parties that are payable to the clients. A common situation would be that our law firm is successful in a legal action that resulted in a large payout to the client. Clients usually agree to have the funds collected by the attorney and allow the attorney to first apply the funds to any open invoices that the client may owe the attorney for past services. The remainder is paid out to the client. So how do we set up for collecting on behalf of clients? Well, we must add an account to the chart of accounts that represents what is owed back to the client. The account is a current liability. The balance in this account represents the amount of funds that must be available to pay the client on the agreed upon remittance date or payout date, if you will. The funds that are owed to the clients for this reason do not have to be all in one bank account. As long as the funds are available to pay the balances, this account represents how much money of any bank account is needed to be appropriated or reserved for payouts to the clients. So we will use, in our case, a separate bank account for payouts to clients, even though we really don't have to. We must add the bank account for the client lawsuit collections and payouts, and we'll make the name Savings for Client Lawsuit Payouts, and it will be a bank type of account. So, very simple. We click the cog wheel, we go over to Chart of Accounts, and again we want the name to be Savings for Client Lawsuit Payouts. So in the top right we click New. It's a bank type of account. It wouldn't be checking. You could call it savings. Really you should call it a trust account. You see, this explains that it's really a trust account, money held for the benefit of someone else, and that's why they set this up. But instead of calling it the trust account, we'll be more clear. Savings for Client Lawsuit Payouts. And we click Save and Close, and it's added to the chart of accounts. Now, this is where the money will physically be deposited when we collect and paid from when we pay it back to the client. During the setup of this course, we already added the liability account that we need. When we input the attorney's chart of accounts, we added an account called Payable Collected Client Funds. It was set as a current liability. The detail type was trust type of account, and it represents what's reserved in our funds for client future payouts. Let's take a quick look at what we did. So if we scroll down in the chart of accounts to the liability section, here we put this, Payable Collected Clients Funds, and it's a current liability as the type, and the detail type was trust account. And if we click Edit, we can take a look at the explanation of the trust account. Amounts in these accounts are held by your business on behalf of others. They do not belong to your business, so you should not appear to be yours on your balance sheet. This is a contra account that takes care of that as long as the two balances match. So basically, if you have a separate bank account, the balance in the separate bank account should be equal to this on the day you report your numbers. But that's only if you have a separate bank account. This could still equal the amount that you owe even if the funds are distributed in different bank accounts. But that's not recommended, and that's not the way we will do it here. So, this is the procedure for collecting funds and paying them back to the client. Before you record collecting funds for clients, we must input any invoices for services that we have rendered or will soon render. We record receiving clients' money in the receive payment window. Make sure all invoices are applied to that payout before giving the money to the client. In other words, we keep our cut before paying them back the difference. On payout day, we write a refund check exactly as we learned in the video of refunds that was prior to this video. For example, let's imagine on April 22nd we performed legal services for Alan and billed him $3,000. We have to record this before we record collecting the payout from the lawsuit. But before we record that invoice, let's take a look at Alan's balance in the open invoice report. Notice currently we owe Alan $1,200 worth of future legal services before April 22 when we did the service and billed him. So if we did a $3,000 service for him and he already owed us $1,200, that means after we make this invoice, he will owe us $1,800. In the top left, we click New, Invoice. We make sure the date says April 22nd of 2021. The client is Alan. The product or service that we did for him is the legal services rendered, and the amount of this invoice, $3,000. Now when we click Save and Close, you can see that he now owes us $1,800 because we did $3,000 worth of services and he only had a $1,200 remaining retainer balance. Now let's see what happens when we get the payout. Let's imagine on April 26 we collected $50,000 on Alan's behalf. And then April 30th we paid him. But let's just record the April 26th before we do anything. We must use the receive payments window because only the invoice and receive payment window, and of course credit memo, will affect clients' balances in the client's reports. So we must click receive payment. In this case, the date that we got the money was the 26th, and the bank account that the money was physically deposited into is this account, the one we made a moment ago, Savings for Client Lawsuit Payouts. That's a bank type of account where the detail type was the trust. Now, of course, we choose the client because even though the client is not paying us, this is still the client's money. So to make sure it properly affects the client's balance, we don't put the name of the payee on the list. We choose the client because it's affecting their balance. And the amount of money that we physically received, $50,000. Now, when we click Save and Close, the balance of the client will be $48,200. The difference between what the client owed and what we just collected. Save and close, and you can see the open invoice report shows $48,200. That's what we owe Alan because he owed us $1,800 before we collected. Now, April 30th, We paid Alan the collected lawsuit settlement amount less the fee that he owes us. So, that's very simple. We write a check the same way that we wrote the refund check. So that's the balance in the open invoice report right before the payout. So, we're going to click New, and just like we learned in a previous video, we click Check to write him a refund check. Now again, we have to make sure we remember the balance, $48,200. And of course, the date of the check is the date that we paid him. I believe it said April 30. And we're paying Alan Arby, the customer. Now remember, whenever we refund money to the client, the account is unearned legal fees, because this money improperly went into unearned legal fees, which was an accounts receivable type of account. Unearned legal fees. That's where the money went, so that's what we have to put. We again choose Alan, and this amount is $48,200. That we make sure it's not billable because it's not an expense. But remember, this is the account that represents what we owe Alan because we used the receive payment window to record collecting it. And be careful, you must make sure the payout check to the client gets recorded in the account that the money was originally deposited into, Savings for Client Lawsuit Payouts. Now when we click Save and Close, we can see that Alan's balance has become 0. In order to remove both of these from the open invoice report, we would have to double-click to reopen the payment and then apply that payment to the check. So we see that it's a $50,000 payment. $1,800 was already applied to the service invoice that we gave. So all we have to do is click the check mark, and the remaining amount will be applied. The remaining amount, meaning the check, will be applied to the invoice in this very tricky window, this receive payment window that allows us to apply checks and invoices to payments that clients have given. Save and close, and then click Yes, and now you can see that everything is wiped out on the open invoice report, and Alan no longer owes us anything. Now, some of you are saying, wait a minute. We did not use the payable collected client funds liability trust account that we bothered to set up at the beginning of this video. That's because we did not need to report our numbers before paying the client. If we report our financial statements after we collect but before we pay, then we will adjust and correct our numbers before reporting. So then you may well ask, well, what needs to be adjusted? Well, the money that we collected wrongfully went into the unearned legal fees account. Just the amount of the payout balance, not the amount we earned for legal fees, but just the amount of the payout balance needs to be transferred into the account we created, Payable Collected Clients Funds. And how do we do that? We make a journal entry. Example 2. May 2nd, we billed Betty for legal services for $2,000. So just follow this example. New, invoice, Betty Boop, okay, May 2nd, legal fees, legal services rendered, and how much was it? $2,000. So let's just go ahead and make this invoice. Okay? Now, when we click Save and Close, now Betty has a balance of $2,000. But if we click the reports and we look at the trial balance The $2,000 that we owe Betty is properly recorded in unearned legal fees. Stay with the story. Now on May 15th, we billed her for more legal services, $5,000. All right, let's just get rid of that. Invoice, what was that? May 15th, yeah. Betty Boop, May 15th. Again, legal services rendered, and the amount for May 15th was $5,000. Now when we click Save and Close, now there's $7,000 in unearned legal fees, and it's all Betty. Reports, open invoice. Betty owes us for these two invoices, and that represents what's in the unearned legal fees account. Okay? Now, May 30th, we collected $100,000 on behalf of Betty for the proceeds of the lawsuit. Now let's record it the way that we learned. We click New, Receive Payment. It's for Betty. Notice the two invoices show up, but most importantly, you have to make sure that you choose the correct account that the money was physically deposited into. And notice that the money from the payout automatically gets applied to the invoices that Betty owes us. So now this bank account goes up for the deposit that we made, and it automatically gets applied to the client's balance. So we now owe Betty only $93,000 because the other two, the rest of the payment was applied to those two invoices. Now watch what happens when we click Save and Close. So Betty's balance is correct, and the open invoice report is telling us how much we have to pay back. But here's the problem. When we click Reports and we go to the trial balance, it says that that $93,000 is unearned legal fees. But that $93,000 is not unearned legal fees. It's actually money that we owe to the client for the payout. It's actually the other account, the account payable to clients for legal services. So what must we do? Well, we don't have to do anything if we did not have to report our numbers on May 31. But on May 31, we must report, for some reason, year-to-date financial statements. Therefore, we must adjust that amount and put it into the correct liability account, and then after we report our numbers, we reverse the adjustment so that we can pay her. But on May 31, we have $93,000 in unearned legal fees that actually belongs in the account called Payouts Payable to Clients, or whatever that was. So this is how we make the journal entry before we report our numbers. We click New, Journal Entry, like we learned before. Now the date of the journal entry should be the day that we're reporting our numbers. Click under the word account and choose the liability account. First of all, unearned legal fees has to be debited to make zero, because you see it's a credit balance and we need to make it zero. So we're going to debit that, but remember, that's an accounts receivable type of account. We can't make a journal entry without naming the specific client that it goes with. Then the balancing account for the credit of $93,000 goes to the account that we want it to go into, the one called Payable Collected Clients Funds. That was the liability. And again, choose the client because it goes along with it. Now when we click Save and Close, we have a correct trial balance, $93,000 in Payable Collected Clients Funds. And now we have corrected numbers in the trial balance so that we can pull out some of the numbers and make a correct balance sheet, and pull out the rest of the numbers and make an accurate profit and loss. And now that we've reported our correct and accurate numbers, we will now either reverse or remove the adjustment so that we can operate and pay the client back and have everything work regarding the client's records. So, how do you find that entry? Well, in this account, that's the only transaction because we only use this to adjust. It's actually an adjustment. It's an entry. Double click and you see the journal entry on May 31 is the only thing recorded in that payable collected funds account. So it's very easy to find. Double click, and you could make a reversing entry if you want to document both of them. But in our case, we can just delete this. Now, what happens if we delete this? Well, when we go to the trial balance, the money is back in unearned legal fees. Don't worry. We're about to pay it back to the client. Click Reports, open Invoice, so that you can see you owe Betty specifically. Now we're going to pay it the way that we learned. So June 4th paid the remaining amount of Betty's balance to Betty. And that's already the net amount after we collected our fee. So we click New, check. The person whom we pay is Betty. Make sure the money is coming from the same physical bank account that it was deposited into. And the date that we're paying her is June 4th. And it's not, actually it is unearned legal fees because that's the wrong account. That's the account that's holding the money that we owe. And it's not $4,000, it's $93,000. So we click Save and Close, and now Betty's balance is properly zero. Remember, we have to net this out in the payment window. Double click and make sure that all of the payment is applied both to the past invoices as well as the check that we are paying her. So we click the check mark, save and close, and yes. Now nobody has a balance and there's nothing in unearned legal fees.